Hello there. Have you ever seen headlines where a government is spending billions, but somehow the country is still drowning in debt? Sounds insane, right? Well, here's the truth. Almost every country on Earth is in debt. India has debt, Germany has debt, even wealthy countries like Japan and the US are in massive debt. Japan, for example, owes twice the size of its entire economy, and the US, it's over $36 trillion in debt.
So what's really going on? Why are countries borrowing so much? Why can't they just print more money? And who do they even owe? Let's break it down. So the question is, if governments can print money, why do they need to borrow? Because printing more money doesn't create value. It destroys it. Too much printing leads to inflation, or even worse, hyperinflation. We've seen this happen in places like Zimbabwe and Venezuela, where the currency became almost worthless. So instead of printing endlessly, countries borrow responsibly. And here's why.
To cover budget deficits.
Governments earn money through taxes, but they usually spend more than they collect. If the government earns $3 trillion but spends $4 trillion, that extra trillion comes from borrowing. Cutting expenses or raising taxes isn't popular. Borrowing is the easier, short-term option
To invest in growth. Borrowing can help fund roads, schools, hospitals, things that improve productivity and lead to future economic growth. It's like a business taking a loan to expand. Smart borrowing can be a good move. To handle crises. In emergencies like wars, natural disasters, or pandemics, governments have to spend fast. During the COVID-19 pandemic, for example, the US borrowed $3.8 trillion in a single year to pay off old debt. Sometimes governments borrow just to pay off old loans. This is called refinancing. It's common as long as it's controlled. But if a country keeps borrowing to repay past loans without a plan, it ends up in a debt spiral. That's what happened to Sri Lanka in 2022. To manage the economy. Borrowing is also used as a tool to control inflation and stimulate growth. Central banks buy and sell government bonds to inject or remove money from the economy. So, who are countries borrowing from? There are three main lenders. 1. Domestic investors. Citizens, banks, and institutions buy government bonds, lending money in return for interest. In the US, agencies like Social Security also invest in these bonds. This is called intragovernmental debt. It makes up a big chunk of total debt. 2. Foreign lenders. Other countries, like Japan or China, also buy US bonds. Foreign governments, banks, and investors lend billions this way. Developing nations might also borrow from development banks like the World Bank or Asian Development Bank, or the IMF, which provides emergency loans, but usually with strict conditions. 3. Central banks. Governments technically could borrow from their own central banks, but this is risky. It's usually avoided to prevent inflation. Instead, central banks buy government bonds on the open market to influence the economy, not to directly fund the government.
Debt itself isn't bad. It depends on how it's used. If borrowing leads to growth or helps during a crisis, it's useful. If it's used recklessly with no return, it's dangerous. Too much debt means a country is paying more in interest and less on healthcare, education, or development. Eventually, investors lose confidence. Interest rates go up and the country may default, meaning it can't repay. How much is too much? Economists look at the debt-to-GDP ratio, how much a country owes compared to what it earns. A 60% debt-to-GDP ratio is often seen as safe, but it varies by country. The US has a debt ceiling, a legal borrowing limit, but it's raised regularly to avoid default. Can a country be debt-free? In theory, yes, but in practice, almost no country is debt-free. Places like Macau, a region of China, have little to no debt. But they're tiny, with low spending and huge tourism income. Most nations need debt to function, and that's okay. Even investors prefer countries with active bond markets. It's a sign of stability. A country without debt may actually look less stable, not more. So next time someone says, "Why is our country in so much debt?" you'll know the answer isn't simple. But it does make sense. Debt isn't always a bad thing. It just needs to be used wisely and managed well. Thanks for watching. And if you're curious why some countries handle debt better than others, stay tuned for our next video.